What's up guys, Alvaro here. Welcome to the Bilingual Stock Market channel again. On this channel we talk about the markets and we do it in English and Spanish as well, so you can pick your preferred language. And in this video, and as I do it Mondays through Thursdays, I want to make a quick stock market update. So I want to break down some technicals going over the S&P 500 and the Nasdaq 100, which are the most important indices of the United States stock market. And at the end of the video, I am going to break down from a technical standpoint 3 stocks that in tomorrow's trading session are going to be on the very top of my personal watch list. So without further ado, let's get right into the video. And when we still have 2 more minutes in today's trading session, we're having some sort of mixed day because as of now, we find the Russell 2000 going down 0.54%. Dow Jones is also going down 0.16%. However, the S&P 500, the Nasdaq, and the Nasdaq 100 are on an absolute tear in today's trading session. So both, or 3 actually, S&P 500 reached a new all-time high today. It is up 0.43%. The Nasdaq is up 0.89%, and the Nasdaq also reached a new all-time high, and the Nasdaq 100 also reached a new all-time high in today's trading session. And we are going to go over the Nasdaq 100 in just a second. And what happened today, or what is still going on when it comes to the sectors that trade inside the S&P 500. So for the most part, guys, the heavy lifting today was carried out by a handful of stocks. Once again, I am talking about Apple, which went up today, or is going up today 3%, Amazon up 2.5%, Microsoft up more than 1%. So those stocks are very heavy in terms of market capitalization, in terms of weight inside the S&P 500. So if those stocks go up, the rest of the markets can have, a poor day, let's just put it that way, but the markets are going to go up, at least the S&P 500 and the Nasdaq 100. So as of now, and when we still have 1 more minute in today's trading session, the real estate sector is pretty much leading the way. It is, as of now, the best performing sector. It is up 1.17%. There goes the market. The tech sector ended up going up today 1.05%, and the worst performing sector, this is very interesting guys, is the financial sector, which went down today 1.48%. And keep in mind guys that the two most important sectors inside the S&P 500 are the financial sector and the tech sector. So maybe tomorrow we could see a rotation back into financials, and that could let the tech sector take a rest. And if that happens, the S&P 500, believe it or not, can keep on going up. And now I want to show you some trades that I closed in today's trading session, because these trades were discussed here in the channel. So today I closed a trade with Jinko Solar. This was a swing trade that I opened last week. So I purchased 50 shares of Jinko back on August 18, paying $2,094 when Jinko was trading at $41.88, and today I sold out of these 50 shares at $46.80. I left a lot, but I mean a lot of money on the table, because Jinko Solar ended up hitting $50 in today's trading session. However, I sold my 50 shares being paid $2,339, so I ended up making over here something like $230. I also sold 2 covered calls of AMC, so let me show you the first one. Because in the case of AMC, guys, I have an unrealized loss as of now of almost $600. I have an average cost of almost $50. And I own 100 shares. However, I have been selling covered calls left and right, and the call options of AMC are paid at a very good price. So today I sold a call option that expires on September 24th. The strike price of this call is $54, and I was paid $410. So if AMC happens to be above the strike price, I am going to end up selling my 100 shares with a 400 back profit, and I already made today $410 over here. And the other call of AMC that I sold, here it is. So this is my second trading and investment portfolio. So in the case of this call, I mean, this is pretty much the same call. It expires on September 24th. The strike price is $54, but I was paid for this call option $510. And in the case of this position of AMC, I have an average cost. Let me show you guys over here. So I have an average cost of $44.73. As of now, I have an unrealized loss of $148, and I own obviously 100 shares. So if AMC happens to be above $54 by September 24th, I am going to be able to make a profit of $1,000 selling out of these 100 shares at $54 when my average cost is $44. And on top of that, I have also been making good money selling covered calls of AMC. And lastly, guys, I want to show you a trade that I closed on last Friday on Sensonics. In the case of Sensonics, this was a trade that took a lot of patience, guys. So take a look. On June 23rd, I purchased 400 shares, of Sensonics at $3.57, and I ended up selling out of these 400 shares on Friday at $4.07. So I paid $1,426, and I was paid $1,626 when I sold out of these 400 shares. So I ended up making $200 over here. So for the most part, guys, between the covered calls of AMC that I sold today and the trade that I closed successfully on Jinko Solar, I ended up making something like $1,100. So I cannot complain about today's trading session. When it comes to the S&P 500, this index went up today 0.43%, and it closed today's trading session at 4,528 points. And we have yet again another all-time high, brand new all-time high, guys. I think that this is something like the all-time high number 53 or 54 that we have had so far throughout this year. So the S&P 500 has been on an absolute tear, no doubt about it. So what could happen tomorrow? Because the tech sector is very overextended. Apple is very overextended, as well as Amazon and Microsoft, and the ETF that is comprised of the most important tech companies out there is also XLK is the ticker symbol of that ETF, is also very overextended. So what happens if tomorrow we see a pullback in the case of the S&P 500? And keep in mind what I just told you guys. Maybe we can have a rotation back into financials tomorrow, and that could lead the S&P 500 to go even higher. If the tech sector takes a rest without pulling back a lot, and the financial sector does the heavy lifting tomorrow, we could easily see 45.50 maybe, which would be arguably is a semi-fat number that could start to act like a magnet in the case of the S&P 500. But take a look at this clear uptrend. We are trading above the moving averages, and the RSI is a bit elevated. It is at 67 points, but we know that we have seen before the S&P 500 trading with its RSI being at higher levels, 83 or 85 points. So if tomorrow we see some sort of rotation and the tech sector doesn't pull back a lot, the S&P can no problem hit 4,500. Another scenario that we could see in the upcoming days would be the S&P starting to consolidate between 4,500, which should act as lower support in case of a pullback, and the new all-time high at 4,537. If the S&P trades, let's say, for 4 or 5 trading sessions without either going higher than 45.37 or breaking the lower support of 4,500, that is going to let the RSI of this index to cool off a bit, and that is going to be very bullish, guys, because we are going to be forming on the 4-hour chart a bull flag that would signal that we are about to see another leg higher. So there is nothing to complain about the S&P 500, and as I just said, the fact that the financial sector was the lagging sector today could lead to a rotation in tomorrow's trading session. When it comes to the Nasdaq 100, this index is starting to get a bit overheated. I mean, it is already overheated. We can see the RSI of the Nasdaq 100 at 76 points. So yeah, this index should pull back a bit. If we happen to see a pullback tomorrow, and mind you guys, I didn't say this, I forgot to tell you that we have a brand new all-time high in the case of the Nasdaq 100 at 15,620 points. So in terms of support, and if we happen to see a pullback tomorrow, which should be the case, because as I just said, the RSI is very high, I am going to keep a close watch on 15,400 points. 15,400 points is a former all-time high that also obviously acted as overhead resistance back on August 25th. Can the Nasdaq 100 keep on going up? Yes. But that would require Apple, Microsoft, Amazon, and company to keep on going up tomorrow, and those stocks are already very overheated. So the most healthiest, let's say, scenario for the Nasdaq 100 would be pulling back down to 15,400 points and starting to trade sideways for at least 2 or 3 trading sessions. So if the Nasdaq 100 happens to do that, then the RSI is going to cool off a bit, and that could be signaling that the bulls are gathering momentum in order to make another push higher without the RSI of the NDX being already so elevated. So other than that, there's nothing to complain about the Nasdaq 100. The trend is your friend. Until it's not, we are on a clear uptrend. We are trading above the moving averages. Yeah, we can still make the case that the Nasdaq 100 is getting too far away from its moving averages to the upside. So I would say, or I would think, that a small pullback down to 15,400, and after that, trading sideways would be the healthiest thing for the Nasdaq 100. And by the way, guys, I think that Zoom is reporting earnings. So let's see if they already reported earnings. It reported earnings, and they did. Yeah, we can see a massive drop in the case of Zoom Video Communications. Let me pull up. Ooh, this was a huge drop, guys. What the heck? Take a look at this. So Zoom just dropped 9% after having reported earnings. So what happened here, guys? Let me pull up the live news tab and let's see what Zoom reported. So revenue came in at $1.15 billion versus $1.2 billion. So Zoom beat on revenue. And what happened? Do we have here the active users? No, I don't see it here. And what about the EPS? Let me see. Adjusted EPS came in at $4.75 versus, now this is the estimate for, let me see, sales came in at $4 billion versus $4.01 billion estimated. So yeah, they missed on sales and they beat on EPS. So this was a decent earnings report, guys, and I don't see active users over here. Yeah, this was a decent earnings report, but this is a very expensive company, guys. So I still need to take a deeper look into Zoom's earnings report. But yeah, the markets are being very demanding with this kind of very expensive stocks. Because no doubt about it, Zoom is a stock that trades on higher multiples. So yeah, take a look at this big drop. In terms of support, maybe Zoom could visit $313 tomorrow. $313 is a previous area of lower support that already acted as such for Zoom back in April. But as of now, the stock of this company looks like a falling knife. So if tomorrow Zoom happens to pay a visit to this area, I am going to be keeping a close watch on, but I need to see the stock of this company settling down at least for 1 or 2 trading sessions, guys, because from a technical standpoint, Zoom looks very, but very ugly. Take a look at the 1 day, 1 minute chart. Jeez, that was a huge drop in the case of Zoom. And the, let's say, second stock of this video, let's count Zoom as the first stock of this video, is going to be NIO, guys. And in the case of NIO, it went down today 0.66% and it closed today's trading session at $37.80. So I got a lot of questions today asking me about spots in order to purchase some shares of NIO. And guys, I would say that in order to start a swing position, $35 is a very compelling price in order to pick up some shares of NIO. $35 is a previous area of lower support that already acted as such for NIO back in mid-April. It also did it back in late March and also back in early March. That would be the price that I would be waiting for in order to start a swing position on NIO. The RSI and the 4-hour chart is at 40 points. So we can make the case that this is a possible scenario in tomorrow's trading session or in the course of this week. And if I happen to pick up some shares of NIO at $35, then my price target is going to be the next important area of overhead resistance for the stock of this Chinese electric vehicle manufacturer near $39. $39 is a previous area of lower support that already acted as such for NIO back on July 27th, and it also acted as lower support for the stock of this company back on December 11th of last year. If I were able to take this trade the way that I am describing it, picking up some shares near $35 and selling out of those shares at $39, I could be potentially making a profit of almost 10%. And I also got a lot of questions about the current levels that we are seeing in the case of NIO in order to start a long-term position. And guys, NIO is trading 45% off its highs. So if you did your research work, if you did your due diligence, what are you waiting for? This is a phenomenal long-term discount. And in the case of a lot of Chinese stocks that were today under pressure, we got some bad news from China, because apparently the Chinese government is going to prohibit teenagers from spending more than 5 hours a week playing video games. So that's, I mean, I haven't been able to confirm that news, but that was what, put some sort of downward pressure in stocks such as JD.com or Tencent. But in the case of NIO, that news isn't going to affect the long-term story of NIO, right? And we can make the case that NIO is a tech company. This is a company that is developing technology towards electric vehicles, but I don't think that any of the tech regulations that the Chinese government wants to impose over a lot of tech companies out there, such as Tencent or JD.com or Baidu or Baba, I don't think that any of those regulations are going to affect NIO, because NIO is a tech company, but it is mainly an electric vehicle manufacturer. So I think that out of most of the Chinese stocks that we find out there as of now, and you guys know that I am investing in NIO at a long term, this is the safest play, no doubt about it, in terms of possible regulation. So watch out for NIO paying a visit down to $35, finding a good support over there, and then bouncing back up. And the second stock of this video is not a Chinese stock, really. However, guys, in the case of Ideonomics, ticker symbol IDEX, this is a company that is making most of its revenue in China. And if you guys go ahead and take a look at the website of Ideonomics, and you take a look at the board of directors of this company, yeah, Idex is based here in New York City. The headquarters of Idex is in New York, but we cannot deny the link, let's say, right, between Idex and China. And most of the revenue that Ideonomics is making as of now comes from China. So we got good news about Idex today. So the stock of this American company went up today. This American Chinese company, maybe, I don't know, went up today 4.80%, and it closed today's trading session at $2.40. And what was the good news? So let me pull up here Idex website. So Idex is buying Vaya Motors. So Vaya Motors is a company that is headquartered in Odem, Utah, and this company will manufacture, it's not manufacturing yet, electric commercial vehicles including Class 2 through Class 5 cargo vans, trucks, and buses. The company has deep experience in the vehicle electrification market and continues to develop business relationships with commercial fleets and distributors in the United States, Canada, and Mexico. Vaya Motors is also working with an autonomous technology company to provide electrification of autonomous trucks for short-haul and mid-mile delivery. So this is good news for Idex, no doubt about it. Definitely, Ideonomics also owns another company that is based in Utah, I think, which name is Wave. And this company is developing a wireless charging system for buses and electric trucks. So Ideonomics is making an effort, no doubt about it, in order to try to start making money here in the US rather than in China. So the stock of this company went up today almost 5%. So this was a nice push to the upside. So in technical terms, we have a very important area of overhead resistance that is coming up for Idex at $2.52. $2.52 is a previous area of support that already acted as such for Idex back in mid-April. It also did it back in late March, and it also did it back in early March. But we are also talking about a former area of overhead resistance in which the bulls of Idex failed back in early January. So what could happen if the bulls of Idex can take on $2.50? Then the next gap that is going to be filled, hopefully, because you guys know that I am investing in Ideonomics at a long term. This is a speculative position, but I do have skin in this game. So if the bulls of Idex can take on $2.50 and good volume and momentum, then they are going to have a fair chance of filling the gap up to the other important area of overhead resistance for Idex at $3.10. $3.10 is a previous area of overhead resistance in which the bulls of Idex already failed back in mid-June. They also failed back in early June, and they also failed once again back in early April, and we are also talking about a former area of lower support that already acted as such for Idex back on January 21st. So if the bulls of Idex were able to make this push to the upside, and we purchased shares of Idex at $2.55-ish, once the bulls manage to burst above $2.50, and if we sell out of those shares at $3.10, we could be potentially making a profit of almost 20%, a very solid profit. So watch out for this breakout of Idex from $2.50 up to $3.10. And the last stock of this video, I was confused over here, guys, but the last stock of this video is going to be good old Chargepoint. And in the case of Chargepoint, the stock of this company went down today 1.65%, and it closed today's trading session at $20.89. And mind you guys, Chargepoint is reporting earnings on September 1st. That is going to be on Wednesday. I actually opened a position on Chargepoint today, so let me show you. I think that I am a bit under the water, I think. Let me see. Because you guys know that I put my money where my mouth is. There you go. It finally popped up. Okay, so today I purchased 150 shares of Chargepoint at $20.82. And as of now, I have a humble unrealized gain over here of $20. So what's my plan when it comes to this swing position? Well, my price target, guys, in order to close this position is going to be at $24. $24 is a previous area of overhead resistance in which the bulls of Chargepoint failed back on August 2nd, but we are also talking about a former area of support in which the bulls of Chargepoint found support at back in late April and also back in the middle of March. And on top of that, we have the convergence, the coincidence of the 180 SMA and the 4-hour chart with a former area of overhead resistance and support. So, and since I purchased the shares near $21, $20.80 approximately, if Chargepoint, guys, happens to pay a visit down to $19.80, which is a previous area of lower support that already acted as such for Chargepoint back in mid-May. It also acted as support back in late April, also back in late March, and lastly back in early March. So at that price, I am going to be picking up 150 more shares of Chargepoint, guys, no doubt about it. And as I just said, the stock of this company is reporting earnings on September 1st. That is going to be on Wednesday. So I haven't decided yet if I am willing to hold my shares through earnings, but take a look at this, guys. So Chargepoint is trading as of now, let me check on this. It is trading 58% of its highs. So we can make the case that a lot of bad news has been already priced in the stock of this company. So maybe if Chargepoint disappoints on earnings, or if maybe this company doesn't beat on earnings, maybe there's no much room to the downside because we are already trading way off the highs. So I am going to be picking up more shares of Chargepoint, no doubt about it, at $19.80. And I will be very happy if I gotta be very honest with you, because I am seeing the charging stations of Chargepoint all over the place. So I think that this company has a first shot of outstanding inside the electric vehicle charging business. So I am going to be very, but very happy if I can actually construct or build up a position of 300 shares of Chargepoint with an average cost of $20 or $20.50. So if I can actually purchase more shares at $19.80. So if I end up having an average cost of, let's say, $20.60, and if I can take this trade the way that I am describing it, selling out of my shares at almost $24, I could be potentially locking in a profit of almost 13%. So watch out for Chargepoint, guys, tomorrow or in the course of this week, either filling the gap up from the current price of the stock at $20.80 up to $24, or maybe paying a visit to the lower area of support near $19.80, finding a good support over there and then bouncing back up. And with Chargepoint, I am going to wrap up the video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to the channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again, 3 or 4 hours after the market closes. Peace out.